Well, welcome back to the ICC Digital Trade Conference. My name is Chris Southworth. I'm Secretary General of the International Chamber of Commerce here in the UK. Just a bit of housekeeping before we start the session. We've had two fantastic sessions so far today in terms of setting the context for the conference, and also a really insightful session on digitalization in the warehousing sector. And I think what's starting to emerge is sort of different approaches needed for different sectors. But for those of you in the audience, welcome to the session. You can network in the networking space. If you want to ask questions, which we'd encourage you to, please add those questions in your live discussion section, and then we'll make sure those questions go straight to the panel for them to speak. Can I just also say a special thank you to our sponsors, and particularly to Contour, who are sponsoring this session on trade finance. The session itself is about modernizing trade finance practices and building the business case for banking and trade finance in general. If I can ask all of our speakers to come on screen, I'm delighted to introduce you to Merisa Lee Gimpel, who's a well-known face for us at ICC. She's Managing Director and Head of Working Capital Solutions at Lloyds Banking Group. Over to you, Merisa.
Thanks so much, Chris, and welcome to this webinar, which is focused around trade finance. I'm very lucky to have a panel of esteemed experts and practitioners as well to guide us through the next hour. And we have a mission also. So this session is around modernizing trade finance practices, building the business case. And we're going to look at the internal business case for digital transformation, smarter use of AI and technology, and also discuss how ICC Uniform Rules on digital trade transactions will play a role. And with me here in the room, we've got Carl Wegner, CEO of Contour. We've got Venka, Global Product Head of Documentary Trade from HSBC. We've got John Amoti, Vice President and Product Manager for Trade and Supply Chain Finance, Bank of China, who's with us, even though he's on holiday today, which is great dedication. And last but not least, we've got Andre Casterman as well, a well-known in the industry, founder and MD of Casterman Advisory. And our joint mission today, at the end of the hour, is to come away with 2 to 3 or more practical, actionable steps that we can implement over the next 12 months to move the agenda ahead. So moving from talking to action. So guys, that's our goal for the session today. And I wanted to kick us off going around on the first topic, which is what is the business case for trade finance banks for digital transformation? And I wanted to maybe start first with Carl, and for Carl to share his thoughts.
Yeah, I mean, obviously, I think that the digitalization is an opportunity in trade finance, an opportunity for banks to leverage the connections and the connectivity they have with their customers, be able to use data in more innovative ways to provide new products, to provide better financing, based on milestones, based on better data, and hopefully it'll be safer, it'll be a lot more efficient, it'll be cheaper, and on one side of that, in more inclusive. The fact if you can make it more efficient, then there's a much bigger market to talk to and to offer services to.
Completely agree, Carl. At Lloyds, our mission is to help Britain prosper, and we want finance to be a force for good. It's a great way to kick off. And I wondered if we wanted to move to Venka to give the view from yourself and HSBC.
Sure. Thanks, Merisa. Good to begin with. Great speaking to everybody out here. But again, coming back to the business case, and I go back to my thoughts when we did start off with this journey. But I think for us as an industry leader, completely agree with Carl's point. It's about giving those benefits to our clients who are in the trade finance space, making it speed and simplicity being the key themes. But the output that we expect is working capital gains for our clients. I think our efforts are going to go a long way in terms of reducing that friction. And if I look at it as an industry, that what we are all doing together, I think in a big way, the business case for all of us would be the increased velocity of trade, where our clients are able to trade more, right? And that's effectively, to me, the primary opportunity or the business case. Absolutely goes the second and the most important point that comes as a bank is being able to be more efficient with data and digitalization, and in fact make our business safer, which means less errors, less frauds, and those kind of things are absolutely following the primary objective what we delivered for our client. Last but not the least, I think the sustainability agenda is something that's come into all our lives, and I think we as a bank we take it pretty seriously, and this cutting down this paper absolutely goes with the larger theme.
Super, thanks for that, Venka. I might want to tap on Andre now to give your view about the business case. I know you've supported, I guess, both the banking side as well as the fintech side as well. You know, any thoughts on this?
Yes, I think we have to highlight that trade digitization has been a journey the industry has been working on since at least 2 decades. So a lot has been done. And most of the flows that have been digitized are those flows that were not facing legal obstacles or regulatory obstacles, or that were really low-hanging fruits for banks and corporates to digitize, such as offering a bank portal to give more visibility on transactions, for instance, or accepting transactions via a portal to apply for a letter of credit, for instance. So a lot has been done. And I think the mindset change that we have seen is that over the last 2 decades, indeed, we have been thinking about paperless trade, to remove the paper, to be more efficient, to drive down cost. And of course, this remains very valid. But what is happening now is we see that with new technologies, as Carl mentioned as well, we can do things that you can't just do on paper, such as, for instance, increasing the number of audit logs to check the whole life cycle of a transaction, what has been done, and why a particular decision was taken, what were the data fields used, because the machine is tracking everything. And you can audit much more. You can also track the financing status of a particular transaction. You can to fight fraud against double spending. And this is also very hard to achieve on paper, if not impossible. You can also track, if you're a credit insurer or a liquidity provider in the secondary market, you can track that this asset you're funding or you're engaged on, you're taking an exposure on, actually exists with DLT. You don't need to have access to the original document of the instrument, but with some technologies, in particular as a concept, public DLT technology, you have a technical notary to tell you more about the life cycle of an asset. And then, of course, that's a concept that is commercialized by various vendors. But it's great because we can achieve things, certainly on the compliance side, that paper just didn't enable in the same way. So that's a mindset shift of digitizing to do much more than just moving paperless.
Fantastic. Thanks, Andre. And last but not least, John, what are your views on the internal business case?
Yeah, thank you, Merisa. From my perspective, maybe from a banking perspective, I just see this transformation as not just a key role for ICC or for some specific party. I think it's more of a holistic effort that everyone has to put in their own effort to ensure that this happens. I just see it as an opportunity to utilize a new technology, to create a new or to modify an existing technology to improve business processes, culture, and leading to better customers' experiences. If you look at digital transformation, one of the hindrances people don't know about is culture-wise. If you work in an organization whereby the culture, everything is very monotonous, everything is very manual, it takes a lot for that to happen. So it's something that has to be addressed even within our internal organizations, right from the executives down to the bottom. There has to be a clear digital transformation strategy being put in place by our executives, which needs to be filtered down, from the top down to head of department and down to the various users, so that there are no hindrances. Because one thing, you could have a good technology, implementation could be an issue if you don't have that holistic effort to getting everybody along. drive in to make it as a success. Thank you.
Completely agree, John. And I understand from Chris Southworth that there's quite a large base here in the audience from the banking community, trade finance across the world. So definitely we're going to make the session interactive. You can enter your questions in, and we'll make sure the panel gets to those as well. So we're seeing some coming through. So do send them through. But before we move on from the topic of the business case, and maybe this is specific, for John or Venkat, do you want to provide any kind of hints or any tips? Because any digital transformation and business case will require investment and funding. And how have you kind of gone about doing that? If you can share any kind of best practices and thoughts, and I'll be happy to add my own after both of you speak.
Sure. Happy to do that. I think, and I think to bring it to life, I think Contour is one of the business cases, and as a bank, we partnered with Contour, and Carl knows about it. But I think there are two areas of investment. I think people consider investment purely to be technology based or the IT spend. In our experience, what we have really felt the difference is, yes, there is a bit of IT spend, but that's not probably the biggest challenge or the biggest time-taking investment. It's the investment by the overall management trying to push this messaging, right? As John just mentioned, this is an overall concerted effort. So even within an organization, we just don't need a few experts who understand technology, blockchain to be the evangelist of it, right? We want each of our salespeople, when they engage their client, to help them in enabling that. We need each of our senior management, when they speak to the senior guys in the client's offices, to understand what it means for them strategically. And I think one of the most important things, which I think is happening, you consider these panels or you see the governments taking action, is the industry taking action and recognition that, yes, there is an investment. So to me, being able to put this across and drive this up is the biggest investment, and which is what we are attempting to do. Thanks.
Yeah. From my perspective, I've worked in capacities as a transformation manager. I looked into various platforms and looking at how to digitize some of the offerings to bring in new technology, even in my current organizations. One of the things I've seen in terms of getting the right budget and support from my main perspective on a new solution, you have to have a very strong case and see that customers truly needs that particular solution you want to put in place. One of the things we have done with Bank of China was we've gotten customer feedback as regards a particular digital ledger technology, which we decided to sign up to. And we find that customers are using this platform, and there's a business case for us to use it. And it didn't make sense. So it was a no-brainer when we wrote our proposal and putting the right budget in place. And we got the necessary approvals. As if you go ahead of the curve and write a business case without getting that customer feedback on the usage of a particular solution or a particular system itself, it becomes very difficult for management to see a need to adopt that particular system. So it's very, very important that you have that customer engagement, you carry them along what you want to do on a particular solution, and so they see there's a need for it, then you tend to get that support from a management perspective, because budget is very key. You're competing with so many other, what I've seen, we compete with so many other systems, other need for compliance, and this is more business related, so it could be quite challenging.
Super. And I guess from my perspective, I completely agree with Venkat's point. When you put in the investment case, don't just think about the tech spend. You have to make sure you've got enough kind of budget and resourcing to do, business readiness, to engage with customers, bring them along the journey, et cetera. So that there is a lot more than just, I guess, the tech spend. And I guess maybe the other element I would highlight is kind of an agile approach into it. And I know those on the panel agree here as well. The fact that we should test quickly, right? And then and make sure we adjust, maybe fail fast on some items. But if you look at a proof of concept to move to a pilot and you want to scale it, if POCs and pilots are successful, we need a quick way to actually go ahead and scale as well. So I guess kind of my thoughts on this. I'm looking at the questions coming through the chat, and I think it, Franceni Evangelista, it leads on to the next question really well, which is all around, how can the ICC URDTT play a role? How are ICC digital standards being integrated into existing systems and practices? Who wants to go first on this one? Venka?
So I think the URDTT is something I think lots of us on the table have worked towards it. But if I could put it in a simple sentence, I think what we expect URDTT to do is what UCP is today stands for an LC. That's what it's going to be tomorrow for the overall trade. And here's the interesting bit, right? If you think about it and the way ICC was patient, and I think there were lots of inputs coming in. What the most interesting thing that I do see out of URDTT when it evolves is the industry classification of what a traditional trade versus an open account. Those lines are going to blur out, right? It's basically saying what you do today using papers or the way you do it, you knock that off and you're effectively using data to determine the same thing, which is performance, risk mitigation, and financing. So to me, that is surely there for the future, and it's going to probably be the framework that can enable the aspirations.
I see ICC DSI took the right approach, in my view, to take a very holistic view on standardization issues, because it's not just about having new rules like URDTT. It's all around the MLETR as well, and identity management and other issues. So ICC DSI took a very wide approach to standardization, and the word I prefer is interoperability, which is a focus also of ICC DSI, how to make sure that new technologies being introduced, as well as new rules like URDTT, are actually interoperable with the existing technologies. So we have new networks like Contour, but you still have the same vendors on the back office side within the banks, the large trade vendors that need to interoperate with the current networks, whether it's SWIFT or other messaging systems, online banking, of course, very critical, and the new technologies being introduced. So achieving interoperability has been, of course, a key deliverable of the whole internet, because we're all interoperable at byte level. But now, in the trade space, what we want to achieve is being interoperable at the level of the payment commitment, the financing request, and that's what URDTT is getting us to. And indeed, there was a blurring of lines between open account, doc trade, and so on, because at the end of the day, it's all data. And with MLETR, we enable the industry to become interoperable at the level of the data set. The payment obligation representing a bill of exchange or a prom note or another instrument like warehouse receipt or bill of lading. So more and more we see different types of technologies enabling us to be interoperable at various levels, and ICC DSI is our guide to highlight where are the opportunities. Not all clients have the same needs. So some will go for URDTT, some will go for MLETR, some will go for other solutions. But the key, and that's also part of the majority of my activities on the tech side, is to make sure that all those technologies work together. So at the level of the technical layer, being able to assemble the business pieces of business functionality so that the banks can protect their past investment, but still benefit from those new rules, new ways of working, new laws that are coming following the adoption of or the alignment of national laws with MLETR.
Yeah. There's an interesting kind of back and forth also about, what exactly will the DSI be, and what will it not be? Is it a network of networks capable of uniting all banking systems? Is it purely just standards? I don't know. Does anyone on the panel have a view and want to comment on that?
I think there's not going to be any network that's going to be able to do everything. I mean, trade is very complicated, and trade finance is just one part of trade, right? There's the shipping, there's the physical, there's the ESG, there's the bunker monitoring, and there's lots of other things that are involved, customs that are involved in trade. So there's never going to be one system that does it all. Now, I completely agree with Andre that one key thing is that you have to think about legacy and the new technology. The whole world's not going to say, okay, over this weekend, we're all going to upgrade to blockchain, right? It's not going to happen. There's going to be banks using legacy systems for many, many years, and APIs work fine, right? APIs work fine at moving that digital data set from one to the other. But, and that goes to sort of my premise that this is a journey, and I think the digital standards are fantastic. But if a company like ours, we build to a digital standard, but no one is using it, then we're waiting as well, right? So, but at the same point, you can't. So we have to go on this journey, and the digital standards are very important. That, if we could build one interface based on one digital standard, any fintech would be super happy about that, right? But the fact is, not everyone is ready for all these digital standards right away. So it's going to be a journey, and whether it's from legacy systems or the movement of these of everyone to these digital standards, it's going to be a journey, and we can't wait for it all to be perfect. We have to start now and start learning as we go along.
Perfect. And Carl, just on that point about there will be legacy, there will be new, there should also be a mix of paper and digital as well. So what do we think are the risks involved in, and that transition period during that journey where I guess banks will need to juggle with both elements in a digitized way as well as paper? Does anyone want to kick off? Carl?
I mean, right now, banks have gone, and Andre's talking that we've been doing this, some of us have been doing this for over 20 years, right? This digitalization of trade, right? And banks had to learn to work from courier packets to fax machines to emails there's always going to be a new technology, and you're always going to have a little bit of legacy to deal with, and the processes. And that's difficult. And banks have to, unfortunately, take that burden because they have the most advanced customers and they have the most basic customers. And unfortunately, everyone wants banks to be, the high tech, but be utility, so you can still go to the counter and do the services, but be online. So trade finance is no different. So I think that's always going to be a risk. I think that can be managed. I think as we talked about earlier, the risk managers, as well as the senior managers, also have to be able to accept that they don't have 10 or 20 years of data on how digital transactions are better or worse. They're going to have to learn how to accept and make some assumptions. And we're all going to be learning on the way. And I think as we do these sort of these global calls, these global coordination, I think there's also a better potential now for risk managers to maybe work together and understand how to manage these new data sets and new ways of managing data that in the past, every bank did it individually. Maybe we can learn as a group.
Definitely. John, what about from your side?
Yeah, thank you. I do think it's a journey from manual process to digitize our offerings. I know over the years we've been battling on manual processing. That's been the bane of painstaking challenges with trade finance. But I think the pace has accelerated a bit, and the pandemic has given us that necessary catalyst to say, no, we need to get this all wrapped up, and start doing trade finance digitally. During the pandemic, I had the privilege of leading a working group, and I engaged with several of the largest blockchain consortiums. We had those deliberations, discussions. We're looking at a particular blockchain provider to sign up to. And one of the challenges we had in terms of signing up to one was we had to sign up to individual rule book, and there were no unified standards. So that's why I recommend the effort of ICC coming up with the Uniform Rules for digital trade transactions, which will provide then overriding rules which all the rulebook need to sign up to. So it's easier for banks to work with those platforms. And also the good work of WTO and ICC on the standard toolkits, which is also very, very good. I agree with Carl in terms of it's difficult to have just one standard, but at least if it's reduced, because we have so many silo systems right now which don't speak with each other. They don't have the right APIs, and it's very difficult for one organization as a banker, for instance, to sign up to 3 or 4 different ones. They come with the cost implications. So the fewer you have, the better for us from an interoperability perspective.
Yeah. Completely agree. Venka?
Yeah, just thought, on DSI, but kind of worked closely with the teams. I think one of the cultural changes that I see and really feel, it's again a part of ICC. I think we did have in the past something called working groups, and that's how we used to solve. But largely it was designed with most banks on the table who would kind of try to solve this. Today, the DSI, as you may know, the team consists of standard bodies. We have corporates, which is real clients who are a part of this on the table. And in fact, banks are also there. So it gives a very holistic feel of solving the issue. So I think it's a very different approach. And I really commend ICC for kind of putting this kind of a structure together. From broadly, and I think Chris can probably add, but the big piece that DSI is enabling, and I think they've chosen their perfect areas is, one is they are looking at data as one of the areas to be standardized. It's broader. They're looking at trade documents as one of the things. They're looking at technology. And last but not the least, which I do appreciate having it even as an ICC body or DSI, is seeding that, right? Effectively, it's as a product manager, while you can come up with the best of the product, it's commercializing those out in the right way. And DSI has taken that onus too. So there's a big area of work on even seeding digitization, be it the private, public areas, how we work around. But those are broadly what DSI is doing. I think the toolkit is a very good start to begin with, but probably you're going to see a lot more that is going to come out of DSI very soon.
Fantastic. Thanks for that summary, Venka. I think that really kind of sums it up on the standards piece. And I wanted us to move on to thinking about, in an ideal world, we've got the legal reforms, we've got the standards. So what more do we need for adoption? So let's put those two things aside. I know they're kind of big challenges and need to get done. What else are the barriers that need to be overcome? Shall we go to Carl first?
Yeah, it's a great question. I think the key thing is that, as you said, I think a couple people have said it, and John said it as well, is that it's a journey, right? I think that corporates are also, you have innovation, corporates that are very innovative, and as well as some banks. And that's a good start, but that's not going to get anyone anywhere, right? You have to take that POC and put it into production. But at the same point, there's a lot of, from a management perspective, well, if I can't do 80, 90% of my business in this new way, I'm not going to start. And I think the key thing is that we all have to learn together, and things will adapt. We're going to be agile. We're going to change. Networks have to work with other networks. No network's going to control it all. I think, platforms will have to adapt and see who's in the front, who's in the back, who's managing what data at what time. And it'll be morphing as we go along. But I think that the key thing that's slowing us down is, and COVID has been beneficial in that way, that more people see that digitalization is something that you need to think about now, not in the future. But there's still that hesitancy to start. And I think we all need to start. We all need to try to choose a corridor, choose a trade partner, choose an area to start working on that. Because if you wait for digitalization to be perfect, if I have 90%, well, is your company ready to go 90% over the weekend? No, it's not, right? Digitalization is going to change also how you manage your finances. You're going to get data, to make decisions in a different way. Payments are going to be managed in a different way. So it's going to change your cash management as well. So moving step by step is a great way. And the example I use is how many 10, 15 years ago, we had our first apps on the phone that could check our bank balances. And if everyone had said, I don't want to start until I can do FX in 22 countries, I'm not going to even look at this app, then those app developers wouldn't have learned how to, okay, first it's balances. Now I need to transfer between my own accounts in the bank. Now I need to transfer between banks. Then we work to FX, right? Technology is always going to be a process. And I think the real barrier is people saying, I want it to be perfect. It's going to be a learning process.
Yeah, I fully agree, Carl. And indeed, as part of DSI, if I may, Merisa, on the DNI initiative, it's part of the DSI program to focusing on the adoption of new technologies for achieving MLETR. Actually, you can achieve it today. There is no indeed need to be able to achieve the full DSI scope, including URDDD. Banks, corporates can already benefit today from electronic bills of exchange, electronic promissory note on the back of technologies, on the back of legal frameworks that have been adapted to aligned, I should say, to MLETR, like Singapore, Bahrain, Abu Dhabi, and the UK very soon, which will be a role model in the market for around MLETR. But only on that piece, MLETR for bills of exchange, prom notes, is a very simple use case. The technologies are ready. The large banking vendors are ready. Corporate vendors, corporate platforms are getting ready, and it's very easy to achieve. So it's an example of step-by-step implementation of new technologies, respecting the bank's existing past and existing and ongoing investments in their trade technologies, and doing much more. Targeting specific use cases, because the bill of exchange can be used as a collateral when financing receivables, payables, loans, and there's no need to implement URDDD from the start. URDDD is definitely more challenging as an implementation, because once you change rules, you need to tell your clients what are the new way of working. It's not UCP, it's URDDD. So clients will be more impacted than when switching from a paper bill of exchange to an electronic bill of exchange. It's an example of being able to go really forward in a pragmatic way, with very minimal investment. And that's the whole point of what we have done with industry leaders, including some of yourselves, by the way, on the DNI initiative, to demonstrate how that can be achieved.
Can I just add one more thing from a slightly different perspective? When you talked about what else is needed for an adoption, apart from standardization and legal reform, which was great, I think one thing that is very important is for a top-down approach, which is very, very important. I think over the years, we've managed this from a middle-level perspective, but I can see that the good work that ICC has done by tabling this before the G7 is becoming one of the key agendas in their ongoing discussions and putting together some reforms, so that different representatives of different countries get to know about this is what is in vogue today, or in terms of legal reform, in terms of digital innovations. I think that is very, very important. Every region needs to be carried along. So I'm not talking about from North America or South America down to Africa, because if any region is left behind, the adoption process becomes the problem. We don't want a situation whereby you have this other problem that have been faced with previous innovations and not having that adoption from a banker's perspective. So every region itself, especially countries that depend a lot on trade, like in Africa, that it's very important that they're carried along to make it a success.
Absolutely. I think most of them have covered the point, and I think what resonates to me is kind of being able to have this adoption. I think the whole legal framework, if you go back theoretically, is what adds the trust and the confidence, right, in terms of adoption. Not being sure whether when you move to a digital technology, blockchain, what could go wrong, right? And that's, I think, what the legal framework and the standards could. But I think there's one layer beyond that is being able to go, or what to refer to, and there are too many things in the industry, right? So I think to some extent, again, something like a toolkit is kind of a guide towards what to look at, how to be prepared, etc. But I think I would like to also, make a point that the intent or the adoption is not just the corporates and the banks, right? I think today when you go and talk to a corporate, he's not sure whether the ports are going to accept it with a digital document, or will the custom say something. I think that's the level of public-private partnership that needs to happen. Yes, you will have the legislations happening, but you also need, and which brings that legal stability and confidence. But I think it's about the infrastructure, the overall logistics infrastructure being open to and probably rolling that out, which I think can make a big difference. The other pieces are all very important, but I thought this is one piece which we should strongly call out and support countries and governments with.
Yeah, definitely see, we have to bridge that across different regions and countries as well. And in the same vein, we need to ensure that the benefits of trade digitization are, equitably distributed through the supply chain. So not just the large businesses, and you'll see where I'm coming from, also the MSMEs, right? And kind of that whole, I think, Venka, you mentioned at the beginning, we want trade finance to be so seamless and usable so that more businesses can actually take advantage of these products, do more trade finance for either risk mitigation or access to cash. Does anyone in the panel want to comment on that?
I think that fintechs have an opportunity to help that, right? Because banks, if you look at from a fintech perspective, there's an opportunity to help inclusion, to help SMEs do more finance. Because why do banks not want to do the SME finance, right? Because it's just not practical, right? So a fintech can make financing more efficient, right? By digitizing it and making it cheaper. It can build the veracity of the information from the source. Doesn't have to be on blockchain, but digital, they help SMEs, prove that the information is correct. And I think the key thing that a fintech can do that banks, are building, but a fintech can do more efficiently is the accessibility, right? If the accessibility to accessing trade finance is access to the internet. Now, not the whole world has access to the internet yet. That's a bigger problem we can't solve. But if you have access to the internet, whether on your phone or your computer, that's a tremendous opportunity. Most SMEs have access to the computer and the internet. And if a fintech can make it available, that same screen for whether you're an MNC or a three-person company, that is a tremendous opportunity to offer these services and introduce them to the banks, and efficient enough that the banks can act on them.
I think social inclusion is very important. Financial inclusion, which is for the social aspect of the ESG element, such that the smaller scales enterprise, they do get access to the required funding to allow them run their business more effectively. Yes, I agree that when we do most of the supply chain program today, from experience, you tend to leave out even the 80% of the customer who provide the 20% of the revenue. You focus on just the 20% who gives you the revenue, and which is not an ideal situation. I think there is a gap in the market somewhere. And with fintechs coming in here, that is great. All of them tend to depend on funding from banks to be able to provide the supply chain finance. And that becomes another issue again, because you need that funding from the bank itself. So I think there's a gap somewhere in the market where you need to have new players coming in, focusing on those micro scale enterprises. Maybe they are non-bank financial providers who specifically focusing on those SME type of business, and possibly new type of supply chain solution could be another option. Someone come up with something very dynamic that allows us to meet those needs. I think that's not yet there, but I think it's something that we need to we will expect to happen, and we will need.
Completely agree with that. Sorry, Andrew, you want to go ahead?
Yeah, I've seen a lot of new entrants. You can call them fintech, but actually those new entrants are technology providers, but they don't profile themselves as selling technology to banks. They are acting as non-bank originators for supply chain finance and extending the use of supply chain finance to the mid-cap market. But of course, they don't have liquidity, so they need banks in the background or institutional investors to benefit from the needed liquidity, and they work with credit insurers as well and ECAs. But those are actually new technology platforms, building on the success of supply chain finance, approved payables financing, and that are acting as new originators in the mid-cap SME market. And indeed, they want to offer a full experience. Though maybe they will be interested over time to offer electronic bills of exchange and taking advantage of URDTT. But definitely new entrants serving those SMEs and very open to collaboration with banks because of the lack of balance sheets on their side.
Yeah, so
definitely space for bank fintech partnership, especially in trade finance. I think we can all adamantly agree on that one. I do want to bring us back to the mission we've got, which is by the end of the session, do we have a couple of practical steps that we can focus on that we could start next week to drive adoption? So I wanted, the panelists to have a think through that and maybe kind of contribute, one idea, one concept each. And then I've got some really interesting questions from the audience I'd love to discuss. Maybe we'll start with Carl.
Yeah, I think it goes back to things sort of talked about it before. I think the practical thing is start now, right? It's not going to be perfect. It's a learning process. Technology is always going to be changing, but you're never going to learn unless you start. And I think choose a trading partner, choose a bank, and start on this journey, and we'll all benefit from it. I mean, the hardest thing is that there's too many folks waiting for it to be perfect. So I think the key thing is start now, find your bank, find your trading partner, and we'll all learn together. And these standards will come into play. More people can opine on these standards and start leveraging them. And there's a lot to be done. It's not going to be done overnight. So we have it's Wednesday, right? We can start by next week.
Sounds good. And I agree, success breeds success as well. John, what about you?
I think it's more around general sensitization and changing culture of organizations. Some organizations are very, very stuck in the old ways. I think there has to be something being addressed at the executive level. That's something that I'm trying to do, even with my organization, talking to our executives and say, oh, come on, we have these new solutions. Can we do this? Can we do that? The more you begin to drive in those new innovative technology at the senior level, you begin to see a changing culture, and which will begin to filter down, even down from the middle to lower levels. I think that is very important. If you have a good culture, adoption becomes a lot easier.
Yeah, I definitely see that, and experience at Lloyds as well. We've got, a big kind of mission statement, strategy, finance is a force for good, and trade finance has such a role to play there. And I just feel so excited. There's never been a more exciting time, us here in trade finance, not just digitization for the sake of it, but really to empower finance, access to finance, and all of that as well. Venkat, over to you.
Yeah, for me, I think kind of read parts of it out, but two very important things. One, I think messaging, as I heard one of the things, but education and training, and I'm an education and communication, and I don't restrict myself to just the banks, right? I mean, if we can reach out to our customers, talk about it, to say what it does, because that kind of builds the level of confidence. Or talk about, you said success breeds success. Go and talk about what others have done, be it Carl being a part of a fintech or me being a part of a bank, share it with our clients. That's one. The other thing, and this is a little more real and practical, I don't have an answer how to do it, but one thing has to be done at a public sector level or a private-public partnership, is to enable the infrastructure, which is what our clients deal in today, to say that the digitized form of these solutions will be acceptable. As much as they care about banks, they do need to make sure that they deal with the ports, the customs, the insurance companies, the borders, etc. So those are the two themes that top of my mind that we should start as soon as possible.
Great. And just talking about training, and I wonder what what we each think. I think trade finance as a sector has gone, a bit better about making it more understandable. Not talking in jargon. If someone's trying to buy or sell for the first time, not trying to explain 28 versions of a letter of credit. So I guess we have a bit more, to go on just making it so super simple. It's something, I keep thinking about, how would you explain it, to a 5-year-old and 11-year-old, and just to make it much more easy to understand, simplify the heck out of our products. But okay, enough about that. Andre, what about you?
So on my side, I think we can and we will, at least based on the D&I initiative, I can say, focusing on the MLETR, we will deliver to the market more proof points that the laws are changing. Proof points, and the UK decision we all know about is a key milestone, hopefully for Q2 of this year, maybe Q3, doesn't matter actually, but the earlier the better, because it's triggering already impacts and work in France, in Germany, and other G7 countries. So more proof points on the legal side. The UK is the big next decision point, and proof points from leading banks. We have 3 here on the panel who can demonstrate that digitizing negotiable instruments as per MLETR is actually very easy. There's no need to change much. There is a need to add a bit of technology, a bit like you're adding an electronic signature technology when you want to upgrade your portal with electronic signing. It's not a big deal. It doesn't cost much. And it changes the life of your internal back office people when handling those documents, and certainly the life of your clients dealing with bills of exchange and prom notes, and potentially some other more complex instruments like bills of lading. But if we only focus on bills of exchange and prom notes, we can already do a lot of things very easily. The large vendors are ready. Corporate vendors are getting ready. So, and I know some banks are getting ready to go out into the market with their own commercial proof points that this is achievable. So we're seeing a convergence of policy developments. We have been working on ICC, ITFA, WTO, and others since a few years. And other experts at the UN have worked on this since 15 years. That's the whole MLETR. On the tech side, we have been collaborating with, Enijo as a core technology provider, and the China systems of this world, the Finastra, the SureComp, and the CGI of this world very strongly. And now also the corporate vendors like Mitigram and others coming into the market. Now we need to deliver proof points that the clients are benefiting. And that will happen in the next maybe quarter, maybe 2 quarters. But this will be very encouraging to see we can progress sequentially, one step after the other, before doing much more complex things, like indeed checking the financing status of invoices, fighting fraud, and potentially additional use cases like URDTT. So proof points.
Fantastic. That's really great. And there's been quite a lot of questions, comments in the chat about regulators, RegTech. And I think your last comment, Andre, kind of ties in nicely with that. Does anyone on the panel want to comment on, where are the regulators in all of this? Are they supporting the digital journey? Are they hindering it? What about RegTech?
I think we benefit. Trade finance has rarely been understood by the wider market and Basel regulators for sure, given the impacts on capital ratios and so on. So we know we have a communication issue since a long time, but it's improving. But what is benefiting us on the technology side is the technologies that we can benefit from now, like DLT, new technologies, more recent technologies, are actually embraced by regulators on other use cases, payments, capital markets, securities, services. And so regulators are very open now, at least in some regions, because they're working very actively. Central banks, almost all major central banks, like top 40 central banks, are busy on CBDCs, central bank digital currencies based on DLTs. So they understand DLT, they understand digital assets, they understand the importance of recognizing digital property, transfer of ownership in a digital way, and all those new concepts that are integrating new digital options into law will benefit us. And that's exactly what we need, of course, with MLETR, but there is more potentially we can do with DLT over time. And so I think the regulators are in most countries becoming partners, not obstacles anymore, from what I see at least.
Absolutely. I think I kind of agree in this point, and we do see, regulators ranging from Asia to the UK, and I think every conversation, they already have that as a part of their larger agenda to kind of digitize trade and make that happen. Where I do see, and I think it's upon all of us to kind of make that happen as we learn, and it's the same, right? 2 years back, all the 5, 6 of us, the comfort that we had on digital standards or blockchain, or you name it, was quite different. I think it's kind of our duty to kind of engage them, not just at the end to say, look, I've built something, I want to do it, say yes or a no, but maybe a bit more on an ongoing basis. But largely, for the way I see it, where they see that it's something that is delivering value to clients or the businesses in the country, and it's obviously not making anything unsafe, they've been quite open and accepting. We've done POCs and pilots, which was completely new, right? There were risks out there, and we've had regulators being quite open in terms of exploring things with us. We've also worked with regulators in Hong Kong and other countries where we kind of worked together and co-created some solutions based on new technology. So I see a complete changing phase even with the regulators as against what they were an approving body for anything new. They've taken the onus on themselves to also change the larger ecosystem.
Super. And with a couple minutes left to spare, does anyone else want to have, shall we go around and have a kind of final word about practical steps that we can focus on? Maybe I'll start with John. You're on mute, John.
Yeah, practical steps, that's a good one. I think, like Carl said, we have to start. We have to start somewhere. I think that is very, very important. Until you start, you don't get to know, you don't have the experiences, and you don't know what the challenges you face until you begin to utilize these digital tools. Well, we're not short of technologies at the moment. There's technology everywhere right now. So we have to start somewhere utilizing these technologies. I think that's what I would think. The number of digital ledger technologies, on the eighth, or is it artificial intelligence, or is it robotics, process automations within the trade finance? In fact, in my inbox, I think almost every other day, I get, this is not a joke, I do get contacted by a fintech wanting to utilize some system, So right now I'm battling hard to which one to go with, So some I do have those in their discussion with them. I say, no, I don't work with you, but some I just see they do not lot, and I try to bring in those innovation into my bank by bringing up those ideas. Like, can we do this? Can we do that? That's how you start. If you see fintechs bringing some innovative solution as a barrier or as a hindrance, and you push them away, you will not make any progress. So once you see those innovative ideas you're bringing into your organizations, have those discussions with them. Have an open mind. I'm not advocating for fintech, but I think they're doing a great job in terms of collaborating with banks and to provide more needed solutions which banks are not able to provide. So have an open mind, have those engage in dialogue, and start doing something. Then we will get there. Super.
And looking at the clock, maybe 30 seconds from each of the panelists to sum up. I actually had an ask as well. I know the ICC is collating kind of best practice case studies. I think we should continue doing that. So we should regularly publish case studies, explain the successes. So I think that's already in action, but we'll make sure we kind of do that as well. Carl?
Yeah, I think we're all in violent agreement, right? We need to start. The technology, the ability to start is there. It's not perfect. And, these kind of forums where we can all share, we need to make sure that the corporates hear this too. And I think maybe that's because corporates, remember, trade is actually the corporates, right? We're all service providers to help them. So we got to help them understand as well.
Agree. Venkat?
Yeah, it's basically, for me, it's train and communicate, which is our clients, so that they can try new things with a bit more of confidence. And I think the public-private partnership, be it you call them regulators or you call them the ports, but being together in that journey, I think that's critical, because as Carl mentioned, the clients who do trade depend on all of us for the service that we provide. So those are the two things that I think are critical.
Great, Andre.
And on my side, I mean, as we're going to publish more from the D&I initiative, more proof points around how to achieve some of those DSI ambitions, such as the electronic negotiable instruments and MLETR. My focus will be more on communicating how interoperability can be achieved. We don't need all to be on the same platforms and in order to be interoperable, and DLT technology, and in particular public DLT, enables to benefit for trade finance as a community to benefit from the digital asset technology. And that's a concept that we see across multiple financial services, and trade finance is starting to benefit, and certainly on the MLETR, the use of digital assets and NFTs, we can say, is very promising. And but I prefer to wait for a few banks to go live on this, so that we have more proof points when communicating the value of those new concepts and new technologies. And then you have vendors to deliver it. But I prefer to focus on digital asset as a whole, and leave the commercial players to claim the space.
Fantastic. So I want to give a big thanks to John, to Venkat, to Carl, and to Andre as well, and invite Chris back up. Did we achieve our mission, Chris?
We certainly did. I'm busy scribbling notes. Actually, there's some quite clear messages from this conversation, aren't there? I think I'm particularly struck by, this message that we need to start now. I think that's a really important message, particularly for SMEs, isn't it? We were talking in the previous session about warehousing, and there's a big spectrum of diversity. So I think that's a really important basic message that we can convey. I was also struck by the point around PPPs, the public-private partnerships. I think I'm going to end up plugging this in every single session, but the Friday session is exactly that. And I'm also struck by the need for case studies and proof points. I think that's really, really important. It's certainly something that we're looking at more broadly with government as well. is that we just need more information, more evidence of what systems are working, what are not, very practical, so we can learn and share, bring others into that system, and do it end to end as well. There's, so that we're not just testing in isolation, we're actually testing in real time, real trade, from one country right the way through to the next. So we will be able to do that kind of thing, which I think is great. But can I just say, just finally, huge thank you to you, Merisa, moderator. Huge thank you to our speakers. I think that was a great discussion, very aligned with the discussions earlier on. And then for our audience, can I just point everybody to our next session, which will be tomorrow. So this wraps up day one. We're now going into commodities, which will be a slightly different conversation. Again, I can give you that as a heads up. And digitalizing the commodity transactions, that's going to be interesting. And that kicks off at 9 o'clock British Standard Time, or Greenwich Mean Time. So we'll see you all in the morning. Just a huge thanks for everybody for the day. Thanks again to the sponsors, and I wish you all a happy evening, morning, afternoon, wherever you are in the world. Thank you very much.